And for further analysis, we're joined from Washington by Mr. Peter Tanis, Chairman of LYNX Investment Advisory. Welcome to Qnews Economic Bulletin. And let me start by asking you, what are the key reasons cited by Powell for the Fed's updated operating framework?
Nice to be with you again, Mona. It's important for everybody to remember, and you pointed this out earlier, that the two main mandates of the Fed are employment and inflation. So everything Chairman Powell talks about are centered on those two things. And the market reacted today, the stock market reacted quite wildly to the upside. The markets are up 2% today so far because the Chairman Powell hinted that there's probably going to be a rate cut at the meeting in September. And the odds now are over 90% that that will happen, but it's not certain.
Now, from your point of view, how does the current inflation data, specifically the July PCE and core inflation numbers, influence the Fed's policy outlook?
Yeah, so interestingly, in prior meetings, the concern of the Fed and a lot of other people has been that tariffs were going to have an effect on inflation and raise prices, which is something the Fed was very wary of, and that's the reason the Fed wasn't eager to lower interest rates earlier. But so far, the effect on inflation has been muted. It has not been that serious. So the Fed has shifted the emphasis now on the unemployment rate. The unemployment rate has been ticking up a little bit, and that concerns the Fed. A higher unemployment rate would be an indication for lowering interest rates to give a boost to the economy. The Fed didn't want to lower interest rates when the unemployment rate was very low and inflation was a concern. But those fears have eased.
Now, why do you think Powell believed that a shifting balance of risks may warrant adjusting policy stance?
Precisely. And that's why there's a 90% chance that the Fed is going to lower interest rates in September. Keep in mind, though, that we will have another inflation report and another employment report before the next Fed meeting on September 17th. So depending on those numbers, the situation could change. But the odds now are strongly in favor of a cut in September.
But here, what did Powell mean by the curious balance in the labor market? And how does he explain this phenomenon?
Yeah, as I pointed out, the labor markets, as far as the data shows, have only been mildly affected, but it is a concern. And as I pointed out, the Fed is shifting its concern towards the labor markets. If unemployment rate goes up or keeps going up, this is an indication to cut rates to boost the economy. So that is what the Fed is looking at right now. As I pointed out, when the unemployment rate wasn't moving and it was very low at around 4%, the Fed was not inclined to lower interest rates because it might add to inflation rather than hurt it. So that was an issue.
But do you think here that the recent changes in immigration policies, as noted by Powell, really impacted the labor force growth and the Fed's economic considerations?
Yeah, that's a really good point, Mona. The immigration issues could definitely have an effect on certain areas of employment and also create inflation, because most of the so-called illegal immigrants work in areas that it's very hard to find people to work in, notably agriculture, and also in a lot of service jobs in hotels and restaurants and whatnot.
Mm.
So if you take an aggressive stance against them, then you have a potential inflationary effect because you have to pay people more money to do those undesirable jobs. But of course, that will not affect the unemployment rate terribly.
Now, you said that we're expecting two other reports by this next stage. According to Powell, how are the Fed's dual goal of price stability and maximum employment currently in tension here?
Yeah, well, that's precisely what this whole discussion is about. Uh, Unemployment, as I mentioned, is currently a bigger concern than inflation, although that could change.
Mm.
We were concerned that tariffs were going to have a very significant inflationary effect on prices, but so far that has not happened. Companies have absorbed the tariff increases, and also keep in mind that many of these tariffs are not as bad as originally planned because Trump has pretty much won most of the tariff wars. So this is not as much of a concern as it was a month or two ago. But as I pointed out, we are going to get an employment number and we're going to get an inflation number before the next meeting in September. So keep an eye on that.
But you're saying here that inflation is not a problem. But Powell here said that the Fed cannot allow a one-time increase in the inflation in the price level to be an ongoing inflation problem. What did he mean by that?
Well, a 1 point increase would be very dramatic. Obviously, if we even came close to that, the Fed is not going to lower interest rates.
Then
But so
inflation
far,
is a problem, right?
Inflation is always a problem if it occurs. The point is that it has not occurred the way we feared when President Trump was talking about all these very high tariffs. Some of these tariffs have moderated and come down as a result of negotiations with our trading partners. And so far, the effect of the tariffs have not resulted in high inflation, which is why we are expecting a rate cut in September.
But still, Mr. Tanis, there is a delay for the tariffs with with some of the European countries, and also a delay in negotiations between the U.S. and China, right? So yet remain to be seen, right?
Correct. No, the Europe is pretty much under control. We've got those negotiations. I think the general tariff is around 15%, which is pretty acceptable.
Right.
China is still a question mark, and of course, it's a very big trading partner with the United States. But tariff negotiations are ongoing with China, and
so
there is
remains
an
to be seen,
expectation to work
Mr.
it out.
Peter, right? Remains to be seen.
Say again? Sorry.
So it remains to be seen, right?
Exactly.